Sam Rudman is a partner at law firm Robbins, Geller, Rudman, and Dowd, which filed the suit against Facebook and Morgan Stanley, and he joins us now. Sam, thanks very much for coming in. Let's talk very specifically about what you think happened that was incorrect. Listen, anybody who buys a share or a stock has to do their homework. We talked at length leading up to the Facebook IPO about the risks to revenue. What is it that you think these analysts did that ran afoul of the law?
Well, Maggie, first, thank you very much for having me here. I'm always happy to give an opportunity to give the plaintiff's side of a lawsuit. Well, it's very clear what happened here. There was material information that wasn't shared or properly disclosed in the registration statement and prospectus prepared in connection with the IPO. Now, you earlier referenced risks, and everyone knows that there's risks associated with a business. However, when you have clear-cut material information that revenues are not going to continue, the revenue growth is going to slow, and material information, mind you, that the three lead underwriters thought was material enough to reduce their earnings estimates and then tell select investors, but not put that same information in the registration statement, well, my clients and we believe that's a violation of the securities laws, compensable under securities laws, and Facebook should pay for it.
Now, Sam, again on this point, Facebook issued an amendment to their regulatory filings on May 9th. It was widely reported. We talked about it, talking about the downward risk to revenue based on information about mobile users. That was public. Everyone could have looked at it. Why or what material information did the analysts talk about or distribute that was not in that public filing that shareholders could have looked at?
Well, look, Maggie, it's not in my complaint, but it was in news reports recently that I read as early as this morning just how significantly these underwriters took down their earnings estimates. Go take a look at those stories and see what the reductions were. And then go take a look at the statement that Facebook's going to point to in this lawsuit about how there's a trend or a decline. And you'll see that statement doesn't come close to advising anyone how significant or how severe the revenue slowdown growth, slowdown was. Well, that's really what's going to be at issue in the lawsuit. But
you're saying analysts had information from Facebook management that was not in the regulatory filing?
I mean, it certainly seems that way. How else? How otherwise? How do they take down their earnings estimates so significantly? And let me tell you something else. This is material. Let's make no doubt about it. This is highly material information. There isn't a single investor in that Facebook IPO who wouldn't have wanted to know that the three lead underwriters of the IPO, who were out there pushing these shares onto the public, had drastically reduced their earnings estimates. I mean, let's get real about it. This lawsuit is really about the unlevel playing field in the markets. I mean, there is no, if you're a retail investor, you simply don't have a chance in this market. And look at what happened here, how the retail investor got burned. They were clamoring for shares in this offering, and look what happened. Look what happened. They got material information with select individuals.
Is it possible that the bankers in Facebook followed all the rules and that the system just isn't fair, that they actually did exactly what they're supposed to do?
Well, I guess anything's possible, but I don't believe it's possible. I mean, I practice securities laws every day of my life, and to me this looks like a clear-cut violation of the securities laws. That registration statement was not prepared properly, did not have adequate disclosures about the revenue decline. The underwriters knew it because they told people that they wanted to get they had people they wanted to get to the information to, and they made sure they got it. Why everyone else didn't get it, well, hopefully we'll be able to find that out when the lawsuit proceeds.
Sam, there are three plaintiffs now, but this is class action lawsuit. How big do you think that this could get?
Well, look, the damages in the lawsuit are subject to expert testimony. Under the statutes that we're proceeding under, the damages are set by statute, and they're somewhere north of $2.5 billion. Now, in the course of the lawsuit, the defendants will have the opportunity to argue that a portion of the damages are unrelated to anything that wasn't disclosed, that we claim wasn't disclosed in the registration statement or prospectus. I mean, the bottom line is there's a lot of money at stake. How much, we don't know yet.
All right, Sam Rudman, thank you very much for coming on and sharing, as you said, the plaintiff's point of view. We look forward to talking to you as this lawsuit progresses. Sam, thanks very much.